Hey everyone, Nvidia and Meta Platform stocks have been two of my favorite stocks to buy all year long in 2024. They've both been on my list of top stocks to buy. But which one do I like better, Nvidia or Meta Platforms? I'm going to answer that question in this video, comparing the two large cap tech stocks on revenue, profitability, return on invested capital, valuation, and their prospects over the 5 years ahead to determine which one I think is the better buy today. So let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Starting with revenue going back a decade, you'll notice Nvidia in the last year and a half is playing catch up very quickly. $79.77 billion in trailing 12-month revenue for Nvidia. That's up almost double from 1 year ahead. In fact, more than double in 1 year ahead. Meta Platforms doing well for itself also at $142 billion in trailing 12-month revenue. You can see it. Meta Platforms had a much larger lead around 2018, 2019, and Nvidia is catching up quickly. I wouldn't be surprised if over the next 3 years or so, Nvidia closes this gap and they have similar trailing 12-month revenue. Now, when we look at operating profitability, Nvidia is very close to catching up and surpassing Meta Platforms. Meta Platforms with $53.34 billion in trailing 12-month operating profit, Nvidia with $47.74 billion in trailing 12-month operating profit. You'll notice Nvidia's profitability and revenue is growing very quickly. Meta Platforms also growing quickly as well. Each of these two companies has a lucrative business model, strong competitive advantages, and experience in improving operations to maximize profitability. They've both been excellent in this regard, and that's why I've had both of these stocks rated as top stocks to buy all year. Now, looking ahead over the next 5 years, the analysts on Wall Street that are following Nvidia stock, they expect it will grow earnings per share by 46.35% per year over the next 5 years. That's a considerable slowdown from the close to 600% earnings per share it delivered in its most recent fiscal year, growth that is. And so, of course, that growth rate is not sustainable to grow roughly 600% per year, but still, even at 46% per year for the next 5 years, that's a really strong growth rate in earnings per share. Meta Platforms, lower earnings per share growth expectations at 30% for the next 5 years, but still solid if you're growing earnings per share at 30% per year over the next 5 years. That's roughly triple the rate expected from the average company in the S&P 500. So Meta Platforms growing revenue, growing earnings, although not as quickly as Nvidia. The next metric I wanted to compare these two on is return on invested capital. This measures how good a company is at using capital, investing in the business, and generating profitability. They've both been very close in this regard over the last decade. Nvidia in 2017 to 2019 briefly took a bigger lead and then came back down closer to Meta Platforms. And then now again here in 2024, Nvidia has launched ahead of Meta Platforms. Meta Platforms' business is less cyclical than Nvidia. Nvidia's business, you'll notice, is a cyclical business. The semiconductor industry is a cyclical industry. Meta Platforms, not a cyclical industry. Social media operates on an advertising business model, and advertising is not cyclical. Sure, advertising revenue will drop in recessions, but we haven't had a big recession since 2007, 2009. And so Meta's revenue has been relatively consistent from advertising, and that industry is more consistent than semiconductors. It is still sensitive to the economic cycle. When business revenue is declining, they're advertising less often, but it's not as cyclical as the semiconductor industry. Still, Nvidia with 93.75% return on invested capital, that's a really, really strong number. I'm not aware of any company that beats this number on my list of companies that I follow. And I don't follow every single company in the market, but of the companies that I follow, Nvidia's return on invested capital is among the best. It's among the leaderboards. I also wanted to consider their long-term debt. I wanted to check out to see if there's any hidden risks here in their long-term debt, and there isn't. Meta Platforms with long-term debt of 18.39 billion, twice the amount of Nvidia at just 9.7 billion. But remember, when we looked at their operating income, they both generated roughly $50 billion in operating profit, and they have debt of less than half that amount. So their debt balance is very manageable. It's not a big risk here for either Meta Platforms or Nvidia, but it's even less of a risk for Nvidia than it is for Meta Platforms because they have such a smaller amount. And finally, I wanted to compare these two on valuation. Nvidia is trading at a forward price to earnings of 35, while Meta Platforms is trading at a price to earnings of 21.72. However, I believe Nvidia has deserved this premium valuation. And one of the reasons why I feel that way is Nvidia's earnings per share expectations over the next 5 years are at 46% compared with Meta Platforms, which is at 30% over the next 5 years. Additionally, when you look at the return on invested capital, Nvidia is more than 3 times ahead of Meta Platforms in this regard, and it's likely to retain the lead in this matter for at least the next 2 years, given the visibility we have with Nvidia's demand for its GPUs, right? It's roughly sold out for its latest generation technology, and they have newer generation technology coming out, even as previous generation technology is still selling out. So they have the Blackwell GPU system coming out this year. It's about to go into customer hands as we speak. And then at the same time, roughly next year, they've got the Rubin technology coming out. So they're already innovating on the next level when they're still sending out the Blackwell technology, which is almost sold out pretty much. And the biggest companies in the world, including Meta Platforms, are reliant on NVIDIA's GPUs to build their AI data centers, which are so highly in demand right now. Meta Platforms, Apple, Microsoft, Amazon, Alphabet, all spending tens of billions of dollars building their AI data centers and forecasting that they will continue to do so for at least the next 2 years. So you can look ahead in demand for NVIDIA's GPUs and their whole systems, and they're looking strong going ahead several years. So as I mentioned earlier in the video, I like both of these companies. I have them both rated on my list of top 25 stocks to buy. But if I had to choose just one, I would choose Nvidia stock today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.